I'll just get this stuff
All
up
right,
here.
everybody, welcome back to the Opportunistic Trader. It is about 1:30, just after 1:30 on November 6th, Election Day, and we're joined by Tom McEntee. Tom's been joining us regularly talking about equity opportunities expressed with looking for good risk-reward opportunities in the options market. You know, we've been talking a lot about earnings, being that it's Q3 earnings season right now, and so we're going to talk about that, but we're also going to take a look, talk about the markets with election coming up, a lot going on, Fed this week. Oil's having an active week, so a lot to talk about. Tom, how's it going?
Hey, very good, Mike. Thanks for having me again. It's been a very rainy, kind of morose, gloomy day up here in New York. I don't know what it's like down there.
It's actually beautiful down here. I didn't realize it's ugly up there. That could be election swinging news right there. Bad weather.
It's right. It's kind of got a kind of a gloomy look. It's
Now
just
that explains why the S&P is up 10 handles. That means no Democrats are going to go out and vote because it's bad weather and S&P higher.
well, there you go. I mean, it's certainly a nice move off the lows last week. I mean, off Monday's low, we got down to what 2603, I think it was. And I think I'm looking for my number. I mean, I sold some spiders this morning just because I don't want to say boredom, but just because I thought it was the right thing to do. Obviously, it's right now it's the wrong thing to do.
Yeah,
Um,
October 29th, we traded down to 2603. And that is one, two, three, four. I mean, we're talking about 5 or 6, 7 trading days ago, and here we are up 2750 right now. And we got the election looking at us right now.
right. Okay. Yes. I mean, I'm thinking. I had a number in my head. 2603. The last. I'm looking at 27. Was it 2761? I think was I was looking for in the SPX. So we would about 10 handles away from that. Uh, I think we're still in this. I think it may trade there. It may trade through there because it's never that easy. Uh, Look at this, Mike. As we do this, I think I'm going
It's funny.
to.
I'm actually just pulling up the straddle for tomorrow, and it continues to kind of bleed in. First thing this morning, it was trading $42. Right now, I'm showing it more like $37. When I look back with Larry before, it was about 40 or $39.50. So it's coming in, gradually because look, time is, there's less time. But that said, the big catalyst is really tonight and tomorrow morning with the election.
Yeah, I was gonna. It was funny. I saw you guys this morning referencing the straddle. I think it 42 bucks.
42 this morning,
30.
definitely. Yeah, it was the
And so
35 straddle. Yeah.
yeah, and that's roughly about a 1.5. Was that 1.5? That's 1.5%, right?
Yeah.
So I went back and looked. And what was it? The Monday night, Tuesday morning before Trump won? Was it like 1.92 ballpark?
No, it was bigger than that. The presidential election, I don't remember exact, but it was much bigger than 2%. I remember, I wish I had the exact stat. I mean, like I was saying, I remember like I was trading with Larry and it was a crazy, crazy night. But no, it was definitely more than 2%. Yeah, 2%. Well, I guess that was still 50 handles. Maybe it was about 50 handles or so.
I thought it was
Um,
like 2% would have been about 42. I think the strat. Wait. We 2100. I think the low was 2076 overnight. So I'm just trying to think where we were. 2140. Did we close that night? I'm a little sketchy on the exact details. Anyway, I thought it was 2%. Whatever. You're probably right. Neither here nor there. Okay. Yeah.
2%. The range,
Let's.
the range that day was like a 9% range or 8%
Oh
range.
yeah. And it was funny is that I bought spiders. I didn't. I like I always have bids in and offers in S&Ps overnight just because. I mean, just because you got to be in it to win it, right? Just because you never know when someone's pain could be your opportunity, or vice versa. But I didn't have anything in that day, and I wake up and they're down. Whatever. By the time I woke up, it was like 5 o'clock in the morning. I think might have been down 40 handles or something like that. They had been down. Were they limit down? I think they were down
It
like
was
100.
limit down. It was definitely limit down, lock limit down for over an hour. And then, I mean, the puts were still trading, though. The options were still trading, and they were sky high. I mean, sky high.
Yeah, that should be a lesson to everybody out there. I mean, you can't. A guy calls are a function of greed, and puts are a function of need. When you need them, you'll pay any price for them. It's just it's amazing. I mean, you saw that, I guess, on a much smaller less inflated scenario here, a week or so ago. But I mean, it's out there. When you need them, you got to grab them.
The only
Whatever
other thing that's interesting about that, it wasn't necessarily, it was the outcome, being that it was Trump, but it was more so the fact that they were 90, going into the end of the day, this exact time, 2 o'clock, whatever, it was highly, highly high, like 90% priced in that Hillary was going to win. And that was really the reason for the explosive move, just because it was so, uncertain, it was the surprise factor more so than anything, options, everything. It was the surprise factor. And so, it seems like right now the markets have it priced in similarly, which is the dangerous thing of, 80 to 90% chance that the Democrats take the House and the Republicans keep the Senate. So.
No, I think you're right. That's an excellent point. That's exactly what it was. I think that was the outlier event. Everyone was so sure that Hillary was going to win. And I don't know, to your point, I don't know if the limit down move was in reaction to Trump winning and being anti-business, or being a bumbling buffoon, or whatever the heck that might be. But I mean, yeah, I agree with you. I think because they were so wrong. Look, just trying to think. Was Hillary like a 5% leader on the popular vote? Is that what they? I mean, it's 2 years ago. So, anyway,
yeah, well, it's funny. That's what they fell back on. They were like, all the pollsters were like, well, we actually had it right because she won the popular vote by a few percent. And she's like, that's what we thought that she'd win by. We just had it dead wrong in the breakdown of state by state and that sort of thing.
But a 5% edge in the popular vote. I mean, obviously, I'm taking the electoral college. I'm simplifying that electoral college, but a 5% edge, 52 to 47, we'll call it like that, would translate about a 90 delta. You're going to win, right? I mean, I would think. So yeah, I mean, I was really shocked. I fell asleep. I go to bed kind of early, so I fell asleep by 9:30. I really didn't even know what. I didn't really see things close and stuff.
That night on election night, you fell asleep at 9:30.
Yeah, I go to bed early. I don't know, 9:30, 10 o'clock.
Please, you were up last night watching football, though.
Well, it's Monday Night Football. It's more entertaining than
Exactly.
So yeah, let's go. Let's so you want to press spiders? Yeah, I think.
So what expirations are you looking at here? Week is this the Friday expirations that you're looking at for the spiders?
Spiders, I got some stuff in November 16. I've done some. I did some call spreads, and I think, yeah, man, I think kind of at the almost not the bottom, give or take. So November 16, I sold these, the 275s, and I paid $1. What did I pay? $1.16 on 2 lots. The 275 regular way Nove, regular way deck. I bought the 277s at the time. They were delta neutral, and that spreads worked out nice. It's like it's a $2 number, 2 and change number. Because you're able to sell it, and I think what you're seeing here is that now the vol curve in terms of time, as you see, I'm just going out here. Let's look at 30 days from today. So that would roughly be like deck 5. Okay, you see, I'm highlighting this. You can see that, right? Okay, that's about a 17 vol. I say, okay, that's obviously not a very active expiration, but that is reflective of where volatility resides right now. And if we go out to January, 16.8. So what you're seeing here, March, roughly the same thing. June. So what's happening now is that I can even this is why I pay $100 a month for a thing that doesn't update on. Doesn't have real-time updating. Here, I'll show you this is the vol curve out 30 days away, 60 days away, and roughly 90 days away. And you notice here, do you see that? You see the way these things are? And I'll get rid of that's the weekly. I mean, they've all kind of melded together. It's kind of flattened, right? I mean, it's pretty much it's kind of a flat curve. It's going to bend one way or the other, but right now it's flat. So what you had certainly in the last 2 or 3 weeks, at the nadir of the decline, was the curve backward dating, where the front month was inflated versus the back, where you could do things with volatility credits. But you got to be careful buying. You got to be cognizant of the volatility you're buying. You got to be cognizant or aware of where that volatility can go 2 weeks out, 3 weeks out, stuff like that. So it's not that long ago. I mean, it's not ancient history. I mean, you can go back to end of September 20th through there, until we started to go down in earnest after the 1st of October. That volatility, the short-term vol was about 10 in SPX and stuff like that. But now it's currently about a 16 and a half, and a vol curve is flat. Now you were able to do some spreads in these things where you could take in like 2 and 3 clicks, 2 and 3 volatility points, buy in December and sell in November, sell in the inflated front. selling the inflated front tenor and buying something less inflated on the backside. It's tough. It's like nothing's impossible, obviously, but it's real tough to lose to sell 23. If you're selling 22, 23 vol in a 30-day option, you could buy 19 on the back end. I mean, you've got a lot of embedded edge there, provided you're risk aware and know exactly where the exits are and how to manage the position. You got a lot of edge going for you. Because if you got to figure, if you look at it this way, if the front tenor is trading 19, it's trading a 19 vol, you're taking in 3 clicks. Well, that's like 15, 16% of 15, 16% in edge you're taking in, and that's an enormous amount. I think you have to be aware of it. Like, I guess somehow me reciting these statistics and these types of numbers might seem mundane, but that's kind of where edge resides in these volatility trades. And that's what you're trying to do. And all my spreads are, what I try and do is when I create a spread, and I've done it in equities and I do it in indices. Is it indices or indexes? I don't know. I would always say indices, but then the guys on TV always say indexes, so I figure they're always right. So I don't know. So you're going to be aware of where you're buying the spread. So that's another thing. Always be aware, what volatility are you paying for that time spread? And if it's at a level where you think, and you want to look at volatility, hey, here's a chart of, this is a chart of spider vol over the last year. Now, obviously, it's inflated. Look here. 1 October was 8.5. 30-day stuff. I said it was 10. I was off by 10%. Look at that. I mean, this thing was just it was somnambulent, right? It just nothing, no movement, nobody cared, and now you get this, and then you get this. So here we are. We're trading about 16 and change, 21, 20. Maybe you get down to like the 14 level before I look to buy it again. 14, 15 SPX, and here maybe that last bottom of 14 back on October 17 is probably a buying point. What does that take in the SPX? Maybe another 30 handles. It'll probably take some type of capitulative move over the 2761 level I referenced at the beginning of this thing, and that's where people get fat and happy again, and then they just start to do the same things. But that's where I'd look to do it. I think right now in SPX, I think I'd want to be a small seller and realize that I think to a certain extent. I remember we spoke, I guess 2 or 3 weeks ago. I guess when this thing first started, that the price, you're putting up more every time you went to the table, whether you realize it or not. There's more embedded risk in the market when you're betting one way or the other, because the market had more of a more randomness to it, where it could be trading it. You had some of these 8-9 handle range, 8-9 point days in SPY, 80-90 handle days in SPX. I mean, a couple of days ago, I mean, what we get the 20s. What was it? The day of Friday. What was Friday's range? Friday's range was insane, I thought, right? If I'm not mistaken, it got as high as, I'll take a look here. Just bear with me here. I think Friday's range, we trade it? We were 30 handles higher than 50 handles lower. Initially, Trump had some type of draft. Wasn't he drafting things for China? And then that was all. I don't want to say it was bullshit, but it was all. It didn't come to fruition. So Friday's range was what was that? 11.2? Yeah, 27.45. 27.45 to 2700. But I think the ES range in the futures were 30 higher at one point. I think before the market opened, because we were trading. I was trying to sell 276 something up there, and I missed it by a couple of pennies.
Yeah, I think you're right.
Right? Am I right? I think there were 30 hand. I know they were trading. I had a number up there. I was selling. I was off. You could check the equity tab. I was off for 276.19 to 276.39. I missed it, much to my chagrin, and then they just freaking cannonballed lower. But whatever, I digress. So that, I mean, I think so. My point then was that I think there's more risk inherent in every bet you play. So obviously size it accordingly, and realize that, and also that there's more with that inherent in the game right now. Or then you had to be aware that your stops had more of a probability of being elected. So ergo, place your stops accordingly. Because I mean, the things like we said, that the thing there's more randomness to it. So it follows that there's more edge to it. There's more opportunity. So if the stops have a greater probability of being elected, then you've got to be, you want to be able to take in more money per trade. You want to be able to make more. So you can't trade. You couldn't trade the spiders for $1. That's a fool's errand. Not just that you couldn't. I don't know if you could trade S&P futures for 10 handles. I mean, it's too big of a number you're playing with, and the swings were too violent. I think now we're starting to return to a more normal market now. Whether that plays out overnight, I mean, maybe we get down about 14 and change in the VIX. I'm sorry, 14 and change in spite of volatility. You take a look and maybe you want to buy something or spread something. But that's what I'm looking at. And I'm also looking at a couple of earnings. And I think as I'm flowing seamlessly here, we have a few that we wanted to look at. There's one that's coming out tonight that are you familiar with the stock Devon Energy, Mike?
I know the name. Not that
You know,
familiar with it though.
neither am I. Neither am I. But to
I'll
me,
bring it up as we speak though.
okay. They're all just numbers to me, as they should be to anybody. I have no. I don't try not to play favorites. I kind of think this stock here looks kind of interesting from the perspective that I mean it's
Devon Energy looks a lot like crude oil the past few weeks.
yes, it's obviously unloved, unwanted. I mean, this is probably sell-all pops, I guess, that kind of deal. So yeah, so I'm looking in here. I think maybe this is what 329. We got as low as 31.18, and what we get as low as here 30.66. I don't know. Is that a double bottom? Who the hell knows? I just kind of think that well, might be a triple bottom. I want to look here. I think this thing I think this thing has a chance to get back up. I was looking halfway between the 30 and the 47, the 77, 38 and a half. I like 38. I think I want to fashion a spread around 38. So what I'm trying to do here is, once again, I'll show you. Mike and I go over this all the time, but it bears repeating. I mean, I'll use this tool here that I pay up for, as I'm logging in here. That I pay up for. It does. I do not get real-time quotes, but it gives me some interesting stuff here with the with earnings and stuff like that. The implied straddles right on the freaking money. I went back over 8 quarters. The extreme move 3 days post release has been about 7%, with 4 of the 8 quarters being 5% or less. So there were a couple of outliers in there. What I want to do is I want to leverage that. I think I'm going to say the volatility. I'll show you what volatility is right now. I mean, maybe we should show you this graphically. Now here, this shows you where, once again, where's the stock? $33. Volatility in the front month stuff is roughly 70. That's on the at the money stuff. And if we go back here to next week, it's 56. Now, I'm going to posit that this stuff will probably, I'm going to say 35 and think I'm being aggressive, but it might trade as low as 30. I mean, if I go here, this will give me a breakdown of where volatility, where implies it. Well, the 52-week meeting is about 35, but it's been as low as 26 and a half. So I'll say I still think you're in a higher vol regime than you've been in, certainly for the better part of the last 2 years or so. So I think maybe 35 is where it might bottom if it when earnings come out, provided they're not so disastrous as to create some type of crater in the stock. So I want to fashion a spread. Say 35 volatility is going to be in the thing, and I want to say that we can get to $38. So how do I do that? Well, that's an excellent question. What I was looking to do is I want to sell. I think there's a cheap spread in here in terms of where you can avail yourself of some decent volatility. You can avail yourself of some inflated vol in the front. I mean, nothing's inflated because I mean the stuff's right on the money. But I want to play that 7% move. I want to play that 7% move in the stock, and say 7% gives me about $2, $2.10, say 35 and change. I look for the outlier move. So I'm going to say that the stock trades up to 36, maybe 35, 36 is okay with me. Over the next couple of days. I realize I'm going out to November 16th, and I want to buy a regular way deck. You see what I'm doing here? I'm shorting the November 16 call 36 line, and I'm buying the regular way deck call 37 line, load factor 6, Mr. Sulo. Maybe that's what factor 6, Mr. Sulo. I'm mixing metaphors here. I'm mixing verbs anyway. Okay, so that's spread here. You can see where this thing is. That's where the spread's trading roughly 35 cents. All right, I'm buying the December. There's a small delta, about a 5 delta long to this spread. I'm buying 42 delta. I'm buying 42 volatility. I'm selling 53 volatility. Now, what I'm doing here is so I can pay 35 cents for this. This is going to give me a lot of room. If I'm right about, if the stock trades up to, if I get 36, 37 somewhere in the next 2 or 3 weeks, it's a home run, obviously. But I'm good anywhere above 33. Anywhere above 33 over the next 2 weeks, I'm fine. I mean, this is a high. I think it's a high probability trade. If I get a rally, trade's 29. It's probably a rip up. I get it, but that's fine. And I think it's a fixed risk trade, utilizing technical metrics that should help you make some money. Now, that's a good trade. I would say deck 37, no 36 call spread in Devon Energy, 35 bid.
Hang on. So deck 37 versus Novi what?
No regular way. No, this is all regular way stuff. Regular way deck 37.
Yep.
Regular way Nove 36. I want to buy deck, sell Nove. I'll pay 35 cents.
Right.
Okay, so that's a small delta.
Are they after the close today or tomorrow?
They are tonight.
Tonight.
And there's another one tonight, Mike. One of your favorites that we first spoke about when we joined forces back on
August. Which one? Twilio. That's our favorite. Yeah, if you guys get those text messages, like you should have just gotten, I think while Tom was talking, that Larry went long crude. That is coming via Twilio. We pay them some good money. That's a good company.
That's Twilio?
That's Twilio doing that. Yeah.
Oh my God!
The Opportunistic Trader uses Twilio. They got a great service over there, and I can see why they make a lot of money. And at the same time, use this as a plug. If you are not receiving text messages and would like to, send us an email or put it in the chat. Send us an email, info@the Opportunistic Trader. Put it in the chat, whatever, and we'll get you set up. Every single trade Larry does, during the day session, let's call it between 7 a.m. and 7 p.m. We'll send you a text message. We won't send you a text message at midnight. So what are we thinking on Twilio? I do remember that. I think if I remember correctly, that was not a profitable trade for you the first time. I think you were leaning short.
Yeah, that was a bit of a it's a bit of an ongoing. It's a battle I've been having with the people at Twilio. I've got my head into me on this one. I got long. What was the earnings like? Right before the Super Bowl, right after the Super Bowl, boom, right in here. I think we closed 20. I did some freaking crazy long spread. I don't know, 30, 29. I bet on an outlier move, got it, and the stock just extended through my short strike. But I didn't care. I didn't mind being long puts. Because obviously, look, I buy the 30. Look, this is expiration, right? We closed on expiration. I think I did then follow the 221 or something like that. 220, 221. Yeah, all right. I think I sold like the 30 line and bought the 31 line, a 32 line out 2 weeks, looking for a move on it, and we get it. Goes from 25 to 29, 32. So now, okay, fine. I don't mind being long puts up in here. I don't mind being long the 29 puts here with 3 weeks to go. I think I got a game. The stock's already up, about 28% in a week or two. Anyway, and I said
it
this.
Looks like Twilio is after the close today.
Yes, that's why we're talking about it, Mike.
So what's the straddle looking?
The straddle, it's probably not. Here it is. I want to put it up for you right now. Option chain. Where we try.
Got to be $10.
Oh, this thing is, I would think so. Yeah, $10. You're absolutely right. My 50 bid is 10.15. So roughly about $10. That's about a 15% mover, right? 14% mover. And probably rightfully so. You ready, Mike? Because I'm half Irish. The other half is Italian, and I have the Italian brain.
Okay.
And I'm from the shoulders down. So that's how I kind of got cheated in life. Here we go. I would look at something like this. I think this thing has I'm looking here, this 62 level. I mean, look, I'm telling everybody out there, full disclosure, I have been dead wrong on this freaking thing. Right for the first day and a half, wrong, covered it here, and then forget it, right? It's been a complete debacle. So, forewarned is forearmed, everyone out there in cyberspace. So, I've been dead wrong. I think this thing, look, this has been the earnings period, or certainly October has been the month of recompense or comeuppance for a lot of these high flyers. I think Twilio is going to feel the wrath of this type of corrective move here in some of these tech stocks. I mean, if you can take out 20%, I know it's taking out 20%, but this thing's had an extraordinary move. It went from 25 to 88 to 87. Yeah, 80. Look at that, 88, 88. Like James Cotton in my Rocket 88. Look at that. I mean, it got all the way up there. It's down. We got that low as 62. I think this thing has a good chance of trading down to 55. This old low. This is May or June. This is July. That's 3 months ago, Mike. That's before the previous earnings. I mean, it filled this gap. I'm looking for 55, and this is what I'm going to do. I want to sell these November 16. I'll put it up here so you can see. It makes it a lot easier. Excuse me. Well, November 16, 57 puts, and I want to buy the December regular weight deck. Now these are these spreads, these two spreads Mike and I have discussed here on the chat are regular weight. I'm not selling the front the weekly. I'm not selling the weekly series. I'm selling next week the 16th and regular weight. Mike will tell you what regular weight means. These this spread is before I load this down. I can tell you what it is right now. November 16, 57 puts. November 16, what am I looking at? November 9, 57 puts. My bad. Maybe I am selling these ones. I wrote it down. I lost my yellow legal pad. 85 cents. 85 cents, and against these doubles. Against these 50s are 110. What was I selling? One moment, Tito, Mike. I'm having a senior moment here.
Take your time. Get us the right data.
November 16, 55 puts. Figure you get those. You sell those for 90 cents. All right, November 6, regular way, no, 55 puts. Sell them at 90 cents, and I want to buy a mixture of the. I want to buy half. If I sell 10 of the 55 puts, regular way, no, at 90 cents. I want to buy 5 regular way deck double puts, 5 regular way deck 50 puts. So I'm essentially creating a hybrid 52.5 put. Okay, so I'll pay like $1.90 and I'll pay like $1.50 for that. You see how I get that? I pay $1.10 here, $1.90 here is $3 divided by 2. I get $1.50. So I'm into that spread for 60 cents. I'm buying a synthetic 52.5 put in December. I'm selling December 6th. I'm still November regular way November 16th. Cents. So that spread will cost you 60 cents. That's another cheap spread if I'm right. If we get back to 62 in this thing, that spread's going to blow up. All we're looking to do, look, and all these things I'm giving you, look, you got fixed risk here.
Hey, Tom, you there?
He's calling me right
now.
I'm here. All of a sudden, I'm very popular.
Who's that? Your broker
I get on
calling
the phone,
you?
All of a sudden, everybody wants to talk to me. I can go an entire weekend without the phone ringing, but now at 2 o'clock on a rainy Tuesday, everybody has to speak with me. So summing up, Twillo, deck 52.5, buy the 50s, buy the 55s, buy 5, sell the November regular way no 55 puts. I'm gonna pay 60 cents for that thing all in, 60 cents for that put spread. This thing goes back to 62. It's a home run. Spread will be $1.30. So that's you'll get 2x on that one. That's a good spread. The Devon Energy is the December regular way deck 37, regular way no 36 call spread. And I think we're paying there. What are we paying for that thing? 35 cents?
Yes, 35 is what I got on the notes.
Cents. I knew I wrote it down here. I wrote it down next to notes for the Carolina Tampa Bay game. Okay, so
is that coming up next week?
No, that was last week. That was last week.
Oh yeah.
So yeah, that was last week. Carolina, I'll tell you.
I got to pat myself on the back. I had Carolina in that one.
Good play.
I thought that was a lock of the week. I got it at 6.5. I
mean, it was the first score I saw was like 21-0. Was it 35?
They got a little closer. They got Fitzmagic got him back in it.
Yeah, I know. I mean, it's just like I'm glad Carolina got the freaking money. That'd be a horrible way to lose if you get backdoored and that kind of crap. I mean, you're just so right.
I saw on that topic. I saw Las Vegas had its worst week in a year and a half in the NFL. Everybody picked winners last week. There were a lot of easy ones out there. A lot of layups.
I guess I would imagine the Chiefs are freaking killing people, right? I mean, it's
Chiefs. I think I saw that spread was like 8 points or something. And
yeah, you know what? I'll be honest with you, Mike. At first blush, I was looking at it. I said I made it 5, and I'm looking to take Cleveland. And I kind of lost track of the freaking days. Like, wait a minute. They fired the coach and the OC. I'm like, I can't go near this freaking team. Because I mean, so thank God I didn't. Because that to me was that thing was out of whack. But yeah, and I'm glad I didn't. I mean, and the Chiefs rolled. The Chiefs are a pretty potent offense.
I forget. Remind me real quick back into. Oh yeah, okay, go back to that one.
I'm sorry. So I gave you Twillo, right? Deck 52, and I'll put this all in the chat. Deck 52 and a half, no double. Put spread 60-cent bid. Devin, deck 37, no 36. Call spread 35 bid. Those are all decent spreads. Now we still got we put an Apple spread on last week. That is, I don't know if anybody did it, but I did it. I sold these. I sold November 9, 190, 2.5. We got paid 9 cents for this thing. And I bought the November 190s. So it's like 80, what is it? 82 should be like 40 cents, right? 82. Yeah, it's about 40 cents. I paid 9 cents for that. I mean, that's a good freaking return, right? I paid 9, it's 40,
Absolutely.
31, 3.5x. I mean, that's a good spread. Now, to me, optimally, a close below 200 in here for the week is that's the perfect scenario where I have all week to play with my
I'll tell you, Apple's still not trading that well right here. We're up $1.25 right now. We traded down to below. I think we got around 198. Might have gotten below. I don't think we got below. Just above 198 yesterday. Back. Traded.
Yeah, so you guys bought it. Like, I mean, I was bidding 97. You look at the chart.
Larry saw a good scoop there. Yeah, made about $2, but he did. He gets stopped out first, but then made he lost $2 and made $4 on it. But yeah, he was looking at that one as overextended.
Yeah, I mean, that was a great. I was looking to buy it in here. I think I bought pre-open. I bought 326 stock or something like that. I was looking to buy this top of gap. This 97. I think I was bidding 97.60. I leave the last 30 cents for somebody else. I was bidding 97.60. We get that 98.20, right?
You've been talking about this 190. You were talking 192 level. I know you've been talking about that for a while. And if we were to get another sell-off in the market, it looks like Apple would probably get dragged down and kind of test that level.
Yeah, I think well, I'm usually wrong, but I think in this case I might be right. That's probably a 1 out of 9 probability. But I think that the bottom in the market might be earmarked with Apple trading down and filling that gap, trading down at 192. Look? I mean, I don't see anybody. Even on TV. Look, I use that. I use a lot of stuff on television as an odd lot indicator. Trademark. Apple was down $8, I guess, post the release on Thursday night, and you got 4 people in that box, like the Brady Bunch on CNBC, and every one of them says, "Well, it's going to rally tomorrow." I'm like, where is this? What is it? It's a bank. You're just going in. It's going to rally tomorrow. Why does it have to rally tomorrow? I mean, the thing has outperformed the market so dramatically during this whole sell-off. It didn't go down. Didn't freaking budge. It's just like there's a lot of money hiding in here. And I think the rats are going to. I think that's where the rats get up the ship. It trades down to 192.5, fills that gap, then we'll take another look. But then you want to flush all this hot money out. All the momentum schmucks are getting flushed out here, and it's going to probably end violently. And that's the way it usually does. And I think we spoke about this, Mike, and I think we might have been on it. I was doing a QQQ Apple spread. I was swapping 40 delta calls in there about a month or so ago. End of August, I think it started. So 2 months ago. Apple vol really got jacked. And I think you pointed this out. I'm not sure. I think you pointed it out, and you said that there was an enormous amount of volume in the front month 230s. I'm almost positive it was you. They were like SEP 230s. And sure enough, like I was just playing, well, it was Q vol 16, Apple vol was 26. I'll take 10 clicks on that spread. I didn't want to call a top in Apple. I said, this hasn't correlated. But the vol is the vol thing is completely out of whack. If I believe in any type of mean reversion, that thing's like a 5.5 click vol difference, on average. So I'll sell 10. How wrong can I possibly be? Anyway, blah 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 blah. And you pointed out that the 230 line had 50,000 contracts to it, and you're right. We went to the SEP 30. I think the front month was. I think the front 10 it was like 9/16 upper expiration 9/14. Whatever the heck it might have been. Regular way September, and 50,000. 230 calls traded, stock trading 2.25, 225, like that in there, and then obviously that permeated through all the freaking front month stuff and just raised the vol curve up accordingly. So now, and we were talking about it, we kind of came to the realization. I think those were ratio writers who probably watched this thing trade. Wait, it opens at 97, gets like it's hanging in here at the 208 level. Why not? I'll sell 3 of the OC 20s, say they were 35 delta against my 210 stock or whatever the heck it might be. 210 stock, it's free money. We're going to run up to 220 and those calls go out worthless. And, I make 11 points in the stock and I pocket the premium. But when the stock just, jumps to 217 and 220, it goes to 228 in a month. It's up 36 points, almost 20% in a freaking month. Now I'm short. Up at 227, I'm short. Now I'm feeling some pain because that guy came in. That guy who bought all those calls. I'm just saying that guy could have bought one, obviously. That guy, he didn't. That guy was panicking because I think when you're ratio short like that in a runaway, which this stock was, I think you get what you can get. You put whatever you can on the sheets to stop the freaking pain. Everybody experiences pain. Everybody kind of handles it the same way. Because that wasn't a professional vol guy buying that stock. There's no way. These guys come in, they'll come in and tiptoe in, and they'll go to a bank. And, hey, I want to buy 1,000. I want to sell 35. I want to buy 1,000 230s. I'll sell 35,000 Apple. What's my price? And there'd be a very, very little dislocative effect on things. But I think this guy just panicked and reached, took offers because he had to get something on the sheets. And I think that elevated volatility across all the tenors where things really got stretched out. Like if you look at this, if you're looking at this, and we're trading at the same level vol-wise that we were during. Look at that. I mean, look at this. Here we are. Here's August. Here's mid-August. Look at this.
Yeah.
It's 16 vol. It's 16 vol. So within a week, by a little bit after Labor Day, it's 23, 20. I mean, it just blew up. Look, you sold vol in here because it's going to go back to, the Apple Amazon model. I know it's always like that, the 16-18 spread. I get it. It always works till this time it don't. And this was a freaking disaster. And this is an example, like, guys, everyone thinks of the worst case scenario for volatility sellers is on the downside, but sometimes the upside can hurt you too. When you get a rally that was that unforgiving, that relentless, and the velocity was incredible. We spoke about it. You and I spoke about it a number of times.
That's a good example of one where it's moving higher and vol increased and was a painful trade.
Yeah. I mean, so I think we're going to trade 192 in this thing. I think maybe this week, but I'd like to see it get below 200 for the week. Have that spread work for me. We'll see what happens. I gave you the Devon spread. I gave you the Twillo spread, and then I think I'm good. We can talk again on Thursday.
Yeah, absolutely. Great information. So got a few things to keep an eye on. Earnings after the bell today, Twilio, Devon, and obviously keeping an eye on the S&P. And Apple as well. So thanks, Tom McEntee. A lot of great information, and we'll speak Thursday.
Great, Mike. I'll put that stuff in the chat. Thank you so much for your time. Thanks for having me, buddy.
All right. Talk to you later.